Hey guys, Doug the retirement guy here. Should we invest into the Yieldmax Ultra Option Income Strategy ETF, the ULTY? Well, as you know here on the channel, we've not been big fans lately of the Yieldmax ETF family. We're just not getting the performance that they promote or advertise. The NAV has been dropping off dramatically. But we got introduced into the ULTY primarily because, one, the dividend yield of 159.03. Now, of course, that number will catch anybody's eye, but the real thing is, if it's too good to be true, it probably is. That's the way I was raised. And that's what got me here to say, hey, let's take a serious look at this. If it's true, it could be a great winner. If it's false, again, another yield max drop off. So the yield max ultra income strategy, we've done some major look into this. And I love this comes directly from their website. And you read the first line to it. ULTY is actively managed ETF that seeks to generate monthly income from a portfolio of covered call strategies, each on the US listed securities. Now here's the thing. I stopped there. They generate monthly income. It's true, but they start advertising a weekly distribution. So I had to dig deeper into this one right off the bat and found out just this month alone, did they start this fund paying weekly. It used to pay every month they paid an income, but now they're paying weekly. So the second thing that came into it was their distribution rate of 76.98%. And I'm like, how can you advertise 159 and then advertise 76? Which one is it? Well, when I dug deeper and made some phone calls, found out 76.98% was the number when they were paying monthly. And 159 is now that they're forecasted that they're paying weekly. So they've actually doubled it because they went to weekly versus paying monthly. I'm telling you now, the red flags start popping up all over the time. Even though the Yieldmax is on guard, or I'm on guard with Yieldmax, when you start putting numbers out that are wrong and they're different, then I got to go on guard and say, whoa, which one's true, which one's not. The next one that got me was the expense ratio at 1.24%. That is extremely high. Most weekly ETFs right now, and I still think it's going to be high, charge about 0.95%. These guys are pushed to even higher. They have no 30-day SEC yield, and we'll explain that in the next screen of why, because we figured this one out. So what my question is ultra option income. What are you investing into? What is it going to? You're not doing any specific stocks. You're not doing anything crazy. What are you actually doing? And what we found out here in their holdings, first off, what are they investing in? They're picking up, I call leftovers. They're picking up whatever is the current hot item that they think can turn some numbers. Like down here, you look at Coinbase. That is the Bitcoin, the Dogecoin, all the different coins that we got going out there. They're also into the ANETs, the ASTs. So I'm like, okay, you guys are selling great options on things that you already have in other ETFs. So it's kind of one of these things saying, is this just a pick up and carry all of anything that's hot and will constantly be changing it? So they're not focused on any specific item. The other thing that you look in here, why you don't see anything on that 30-day yield, they have no treasury notes or bonds. This is a big thing. This is every yield max that you look at always has treasury notes and bonds so that they have a regular income coming in from interest rates from the treasury bonds. And that gives them a good SEC 30-day ruling. And that gives them a good image in everyone's eyes. And they did not do it on this account. So why ULTY in the first place? Well, here we go again. Right from the start. that says it has a strong 76.98% distribution rate, unless you look at the new one that says it's 159. That 76.98% return rate is over a specific period, and it also includes the income from dividends, capital gains, and so on. The 30-day SEC yield, which we explained, there is no fixed income coming in from it. They now offer weekly dividends, but no guaranteed payout. And you know, on the channel here, we love the weekly payouts because we like having the regular cash flow. So every Friday we get money coming in, we can reinvest it, we can pay bills, we can do whatever we want with it. So it's a nicer way of having it. Now the fund is only 1 year old. Okay, and the year birthday change that they did here in 25 was changed from monthly distribution to weekly distribution, trying to get additional people to buy into this. So when I sit down and took the return, and this is where I'm like, okay, all right, this is making sense. 1 month out, they're down 20%. When you look at 6 months out, they're down 37%. When you look at the year to date, they're down 27.77%. And they're down 63.48%. So I'll give you guys this. If you're down 63% and you're saying that you're paying a 76% distribution rate, you add those two together, you may get to that 159%. But you're giving up your entire NAV, you're giving up your value of your stock to get a big dividend. So this is just really already, it's not smelling well. So here's what we did. We took the $10,000 challenge. We put it into our calculator. If we bought this back in March of 2024, the price of the stock was $17.88. We would have been able to buy 559 shares. If you take a look 12 months later, back of March of 2025, that stock has dropped down to $6.62. That's a 43.85% loss. We will have lost $4,384 of our $10,000 initial investment. I don't know anyone who would ever invest in a stock to lose this kind of numbers. The dividend, again, because you're in a time frame that you're switching from monthly now over to weekly, if you look at the dividends, it is just dropped off almost from the beginning all the way to the very end. We were only able to find $2,621 worth of dividends, or 26.22% total, which means our total investment in this stock, we would have lost 17.63%. So as we go back to it, again, if it sounds too good to be true, it's too good to be true. The numbers don't even jive exactly to what they're trying to promote and advertise. And these are their numbers. This is numbers from the national stock market. This is what their performance has been for the past 12 months. So guys, I do this to protect people. We do these videos in the channel to help people out with their investments. And I'm telling you, if I have a big sound, this is a warning. Stay away, don't do it. We look at the price adjustment over time. And this is what I'd tell you guys, put your skis on. Let's go skiing. Let's go have some fun, because it's not holding. Look at the price from $18 all the way down to $6. It is just a drop off across the board. Now, your average price is $11.33 over the past 12 months. The current price is $6.62, which is $41.57 below average. Now remember, I looked at this stock and it said that it lost 43%. So you're getting to the rock bottom of this thing. And it's not even, I would say it's not even close to being said, hey, let's get invested into this. But it is just, it's terrible. So my ultimate summary, guys, if you look at the stock return of losing 43%, thumbs down. Your dividend of 26.22 over the last 12 months, it's a thumbs up, but not even close to what they're advertising. And for a total stock return of 17.63%, baby, that's down across the board. There is no way saving this fund. If you're invested into it, I'm sorry that you're into it, but overall, it's not good. So is good ULTY good for a retirement account? Heck no. I can't find it good for anybody, to be honest with you. That dividend rate is nice, but you gotta pay big to get it. You gotta lose 43% of your value. So this thing, I put it as a hold, but it should be just sell, get out of it, stay away. Warning signs going galore. That's all I can say for you on this one.